Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to talk about the Sell America trade. We're also going to talk about some of the key markets and movers and shakers. The risk-off sentiment all of a sudden in the markets is very, very interesting. We're in a situation right now where we just don't really know what exactly is going to happen on the Greenland front, on the Iran front, or the Venezuela front. You're going to have to excuse me, fighting a little bit of a sore throat. Did too much talking yesterday. That's what happens when you talk way too much. Too much content yesterday, I think. Pushed it too hard. But I'm going to do my best. I think we're going to be in pretty good shape. I need a little cough button that I can hit, knocks coughing out. In any case, it's a Sell America trade. So what's being reported from CNBC and some of the bigger news outlets is that everybody's running out of U.S. equities and then also your U.S. treasuries. T-bills are down. The dollar, I was preaching on and on and on about a weaker dollar. Well, this is sort of the other leg to that dovish Fed policy, is also some folks moving their money out of the United States holdings, which includes the U.S. dollar. So the DXY is off about 0.5%. It was worse. It was a lot worse before this. But it's sort of got a little bit of a rebound. We've got some trade ideas. We've got one going on in the US100 that's pretty good. We actually got activated, and it's starting to behave really what I'm looking for, the way that I'm looking for that bounce right off of that 25,000 level. I think that's going to be a fantastic trade. We've also got a fresh trade idea out in gold, and we've got a 920 EMA crossover, really an incredible call for natural gas. Maybe we should just trade natural gas in the 920, and then we could all put our feet up and go buy the Lambos and the Ferraris and forget about the rest of this. But that 920 crossover strategy on natural gas has been absolute fire, especially on the daily and 4-hour time frame. So I'm going to go ahead and highlight one of those trades as well. Remember, if you need anything at all, be sure to reach out to me over at howtotrade.com. Send me a private message. I'll be more than happy to answer any questions you may have or provide any type of trading support that I possibly can. That's the goal of these streams. That's the goal of the new, really the cooperation that we've seen in the last 6 months between How to Trade and Switch Markets. We want to give you a good, solid place to trade, and then we want to give you the support you need to be a success. That's the bottom line. It has nothing really to do with anything other than that. I'm here to help. That's the idea. And I'm not really here to entertain much. I'm not much of an entertainer, but I do understand how these markets work because I've been in it a long time. Our trade ideas, take a lot of pride in those. They're pretty damn good. And then the other thing is execution, strategies. all the different questions you want to ask somebody that's been around the block a few times. Well, ask me. And if I don't know, I'm not going to make something up. I will tell you I don't know. That's the bottom line. So I want to welcome everybody back. Yes, sir. Good to see you over there. 60. Hey, guys, I'm new here. Welcome, 6. You're always welcome in our community here. You feel free to join either on YouTube or over at How to Trade, wherever you may be joining us from. I want to welcome everybody. Bobby Bob, good to see you over in the How to Trade community. Tuku, Steve Francis, Lita, always a pleasure, guys. A lot of long-standing traders that have joined us over at How to Trade, so that's fantastic. Love to see the trading room full of new faces as well. So welcome, 6. If you have any questions, be sure to ask. I'll do my best to get to them before we sign off today. Okay, guys, this is what it's all about. It's all about fear. Now, essentially what the Sell America trade is, it's all about risk. It's about geopolitical risk. It's Greenland. It's Venezuela. It's Iran. We're going to talk Greenland today. We're going to talk WEF, World Economic Forum. Trump's due to speak tomorrow. Lutnick spoke today. The Commerce Secretary, Howard Lutnick, I believe his first name's Howard, spoke at the World Economic Forum. Big-time statement, really a big-time statement, and something that we definitely have got to cover because it's a preview of what's to come tomorrow. I expect an absolute light show out of the Trump speech tomorrow. He's going to put a lot of people on notice, and I think it's going to be absolutely fascinating. Absolutely fascinating. Okay, let's get right out to price action. Risk is the order of the day. Here's the the CBOE Volatility Index, the VIX. This is Wall Street's fear gauge. We're not going to make it hard. When the VIX goes up, typically stock prices are suffering or they're going down. When the VIX goes down, it means stock prices are going up because sentiment is positive. It's absolutely imperative that you understand how the VIX works if you're going to even look at it on your charts. For me, I'm always referencing the VIX. Hey, Mr. VIX. Every morning I go, hey, Mr. VIX, what's happening? And the VIX either tells me that people are scared or people are cool. And if people are cool, they're bidding the markets. If they're scared, they're selling. It is that easy. Now, here's where it gets a little bit more advanced. I covered the VIX in this week's Switch On Hot Picks video that went out on our Switch Markets YouTube channel. Check that one out as well. I covered a lot of markets in there. It was about a 10-minute video. Go ahead, check it out. Key levels, trade ideas, all that jazz. With the VIX, I really wanted to highlight something. The long-term average around the VIX, pretty good rule of thumb, right around 21. Now, I'm not saying 21 exactly, but in that vicinity is a pretty darn good long-term median, maybe a median average and average. I'm just going to call it a basic average. And the reason why is the highs and the lows that we've seen over the past 25 plus years. Well, there you go, right there. The CBOE Volatility Index, according to Guru, long-term average in the VIX is 18.5. Macro option to VIX typically averages between 20 and 22. That's the one I'm looking for. You can see right here, right around 19 and then 1648. Thatinvesting.com, that's not right. It's not 1648. Maybe if you go way back, get in your way back machine, probably some values that were post-dated. But this area right in here, 20 to 22 or 19, I'll give you anywhere from 19 to 21. That would be the area that I focus on. Now, as far as what all that means, the biggest thing you need to remember about the VIX, and this is going back to March of 1990, something like that, the spikes are during panics. November 1998, that was the beginning of the tech crash. July of 2002, that was after 9/11 when we're actually starting to mobilize and go to war in Afghanistan and potentially Iraq. This right here, the big crash of 2008, that was after Bear Stearns failed, the big financial crash, the liquidity crunch that occurred from 2008 to 12. I lived that. Well, I lived that one too. The one around the dot-com bubble was fun. I was too young really to have any money or anything at that point, but I wasn't then. I wasn't in 2008. That was horrible. This right here, what was that? March of 2020. Everybody here knows that one. COVID. Absolutely. COVID spiked it. What happened here? August of 2024. Interesting how much volatility we got out of the Japanese carry trade. The yen starting to unwind a little bit in August of 2024. That was a big panic. And then right there, what do we have in April of 2025? Tariffs, trade war. Everybody panicked. That was the big crash we saw last April, and it didn't even last that long. Bottom line was it was a major spike. What do those spikes mean? It means you're going risk off, stocks are selling off, and there's a big, big problem with our basic market dynamics. I wanted to hit on that right away. So I had this long-term average sort of outlined. I like my number better than the research. Right there, you see the high right there, 20.69. I love 21. 21's probably what's been on my chart forever as being a long-term average. I'm looking at that closely, and I do believe that essentially what you have there is a situation where we tested 21 and sold off today. So what do we take away from all this? What's the point of any of this? Why show you the VIX? Our risk appetite is probably down today. Why? Because market angst is elevated. The reason why? Geopolitics, Greenland specifically. And the Trump is going to speak at the WEF tomorrow, and God only knows what he's going to say. Nobody knows. He might invoke the Insurrection Act at the WEF. We don't know. In any case, risk is up big. You'll notice that we're up about 32% from where we closed last Friday. You had one of those deals where you had a holiday yesterday, MLK Day. Just go ahead and take a look at our daily action on the VIX. That's it. Gap up. I don't really call it a gap because that was quite a while ago, November, about 60 days or so. So I'll go ahead and say that that's a gap. Probably going to fill this in at some point. But this area right here, long-term average, I would definitely have 21 on my chart if I'm watching the VIX. The reason why the VIX is important, one last time, it is Wall Street's fear gauge. When the VIX goes up, everybody's worried about something, and you're seeing some selling come across equities, specifically in the S&P 500. The VIX is based on S&P 500 options premiums on deferred month contracts. That's really hard if you're a beginner. Don't worry about it unless you're an options trader, and then feel free to ping me over at howtotrade.com. Tell me about your options trading. I'm always interested to learn about options because they are difficult. All right, guys, we got more faces showing up. I love it. You guys just roll in. Check us out. If you miss a key event or something, be sure to always check us out. These things are cataloged. Jason, sup Shane, sup Jay, how you doing? T. Marina, hello T, how are you? Let's see. That is a long name. I'm going to go T. Shire, Small Yeezy. Hello. How are you doing, Small? Not much going on. Let me see. Yes, sir. My yen let me down last night. It was really weird and choppy, though. I'll get it next time. Yen's trouble right now. It's a real challenge. Our 4-hour trade I had set up did not come to pass. We'll go ahead and break that down in a second as well. But a lot going on here. Now, remember, if you want to get in on the action with any of these markets or trade ideas that we talk about, check out Switch Markets, a great broker for you. Thousands of markets, tight spreads. Also, if you're interested in our weekly newsletter that I put out pretty much, I don't know, it's out by the session, the Tuesday London session every week. Go ahead and subscribe to our newsletter there over at Switch. Get switched on with our hot picks. We've got a video that also drops on this channel, the Switch Markets YouTube channel as well. So feel free to dive in to that newsletter. A lot of value there. I take Monday to game plan, and then we hit the key markets and the key events going into the Tuesday UK session. A lot of these newsletters get you locked and loaded for Monday. I don't believe in that. I go Tuesday. Tuesday is when I start my trade because that's when that's when the big guys are back in the room, and that's what I want to do. I want to trade when the trading's the hottest. I want to trade optimal conditions. I have no desire to sit around when liquidity is typically low and when I don't know what the heck's going on. Mondays are a great time to game plan. We cover our Monday psychology periodically. Feel free to tune into a Monday session, and I'll get you locked and loaded and ready to go for the week ahead. Check out that newsletter, though. Tell me if you like it. Give me any feedback at all. If you don't like it, fine. If there's improvements we can make, fine. But it's pretty good. I like it. So in any case, check that out. All right, let's go ahead and get on with this. Let's start off with some trade updates. Pretty good stuff here. I want to go ahead and start with this US100. This was a trade idea that we had out last week when Iran was in vogue, and now Greenland's in vogue. Week to week to week to week. I mean, it's tough to compare the Trump administration to the Biden administration, but let's be honest. Biden took a lot of naps. I don't think Trump sleeps because every week another country's on notice and there's just big-time events over and over and over again, middle of the night, after market, during market. It's an absolute light show, and what I mean by a light show is the action. I mean, it's like it's watching an LED light show. It's like watching your big screen TV. Something's always moving. Something's always going. And I watch it and I go, does this guy ever slow down? Does the administration ever take a break? And the answer is no, they don't. They don't sleep. I'm convinced they don't sleep. US100 plays on Iran fears, and we're already on a Greenland fears. Fascinating. We haven't even talked about the Insurrection Act today. We may not get to it. In any case, the VIX, great precursor to what could happen in the US100. Now, remember, the VIX isn't related to the US100. It's related to stocks in general. Could be the pullback that we've been waiting for. Now, I outlined this last week. Our key level was somewhere right around 25. What was it? 25,175, somewhere in that zone. And we're looking for we're looking for a few hundred pips here. This was a fantastic trade earlier today. Now, you can see what's happened. We're really pushing that 25 level. little bit of bearish sentiment in the market today. So if we do survive, this bullish pennant on the monthly chart should really be intact as we roll out of today's trade. I'm very confident that 25 holds up as downside support. So that long idea was right from above that 25 level, that 25,000. Let's go ahead and take this down to a 30-minute chart and show you exactly what the price action's been. Really a fantastic, what I would call just a hard strike. It's a hard test. That's not a proximity test. That's a hard test. Now, one of the things that I'm going to have to build some content on, I'm going to have to do it because we see it over and over and over again around our key levels. A lot of you that follow my live streams, if you're brand new, then you probably don't know what I'm going to point at, but those of you that have been here know exactly what I'm going to point at. That's a hammer. That's a hammer. Love hammers. Hammers off of key levels make me smile. You know, the old John Denver song, Sunshine on Your Shoulders makes you happy. Hammers from key levels make me smile. When I saw that hammer, and I didn't see it, you know, probably till I got out of bed this morning, but it was an early one. I got up and I said, wow, there was a hammer off of 25. My compliments to the chef, winner, chicken dinner, ring the bell. Look at that. So you got an incredible, really a bid right there from 25,000. You really didn't take any draw at all. 24,946 and then a bounce. And then you got the big bounce off of 25,000 that went right up there to about 25,282. Fantastic stuff. So realistically, your profitability depends on where you entered this trade. If you got 25 on the nose, that's absolutely fantastic. We were a little more aggressive than that. And the reason why we were a little more aggressive than that is because you kind of have to be when you get into this type of opportunity with a key level. I'm really not too concerned about letting this thing play out, but the key level was sort of right up in here. And this trade got activated really to open the trading week, and then you got the big rally to the top side, and that sort of got you involved with a nice profit right off the bat, up there right around 288, which is about 100 pips. We're looking for a little bit more. We'll see if we get it. We may not get it. Today, by far, will be the most challenging session, aside from tomorrow, of course. But today is definitely a challenge because business is back. Business is picked up in the markets. There's a lot of participation, and there's a lot of action in there. So you got to be really careful about what you do today. But, man, it's a pretty good trading day. It really is. So if I'm going to take risks and I'm going to get in there and make a play and make a bid or a sell, whatever I'm going to do in whatever market I'm going to do, I want to do it when the action is on, when things are happening. It's hot. The markets are hot right now, and I'm smiling ear to ear because we've had some great opportunities. We've got more great opportunities coming up. Lots of key levels, lots of retracements, lots of markets in play. This one right here is currently in play. I really like this one. We're going to see exactly how it pans out. I would love to see a 30-minute chart. I would love to see a daily close somewhere up around 25,250. If we get that, maybe close this thing back up in the positive, we're going to have a fantastic opportunity potentially to get an accumulation trade. But remember, Trump is due to speak tomorrow, more than likely. Going to bring some heat to these markets. I would probably look for maybe a rebound overnight. Profit target's going to be somewhere right up in here. I'd have to look at the exact target, but I believe it's going to be somewhere up in here. So this is a bigger trade. We'll see exactly what happens as we roll into tomorrow's session. Okay, we do have another trade idea. We've got the gold. Now, this Sell America trade, what is the Sell America trade? The Sell America trades get rid of all American assets. I'm going to show you the article in a minute. I've never heard of it in my life. I've been doing this a long time. You could actually say that I've been going back my financial career, or at least my financial literacy and education career began when I was in college, when I graduated, my last year at college when I graduated in 2002. So I've been looking at this stuff a long time. I have never heard of the Sell America trade. I call garbage. I call BS. I think it's a marketing ploy to get people to exit their holdings. I'll talk more about that in a second. So what does the Sell America trade mean? Well, it means you're dumping U.S. assets and you're snapping up safe havens. Gold, one at the top. Silver, definitely you can't look past silver. If you're not looking at silver, you're missing something. But 95 silver right now, gold right around 47.64. 47.64. That's spot gold. This trade idea is very simple. Very, very simple. Let's go ahead and see what's happening. Key levels 5,000. Easy peasy, lemon squeezy. That is the key level. It looks to me like we're going there. 47.64, 5,000. We've come an awful long way not to test 5,000 in gold and $100 in silver. So what we're looking to do here potentially is to grab a nice little compact short in front of 5,000. Now, I do not recommend shorting right now. I think that's a horrible mistake. More than likely, you're going to get nailed unless you could hold this market and give this thing room to breathe and maybe play a big Trump announcement tomorrow that hurts gold. As far as I'm concerned, dollar index is getting hit. Geopolitical risk is exacerbated. You've got a rally in the VIX. This all spells gold, 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 gold. And that's exactly what we're seeing for this week. You're already up almost 4%, and we're rallying right towards that key level. So our trade idea is relatively simple. The concept is easy. I don't mind trading against trends, but what I won't do is I won't take a position against a trend. Now, the trade we just outlined in the US 100 is much different. We're following a trend. We're following a bullish trend. We're playing the bottom end of that bullish pennant. And if it breaks against us, we get out, we scratch it, we'll go in on a retracement level, we'll get paid back that and then some. I'm not worried about that. What we are worried about is potentially holding a position against gold. You don't want to do that. But what we do know and what we can do is we know there's going to be a tremendous amount of action up there at 5,000. We know that. There's going to be buyers. There's going to be sellers. There's going to be profit takers. There's going to be folks that are going long. It's all going to happen right there, right in the vicinity of 5,000. Now, where the action kicks off, we really don't know. That's where this becomes a guessing game. If I actually ran a brokerage and had access to the books and saw where the liquidity providers had all the market orders, all the limit orders right up around 5,000, maybe if I knew where the hedge funds were going to start maybe actively shorting or taking or limiting their gold holdings around 5,000, then we could dial in an exact point where we needed to be short this market. We don't have any access to any of that. At least I don't. Maybe you do. And if you do, congratulations. You shouldn't be listening to what anybody has to say about trading. You should just be playing the book. Bottom line is this. Right in front of 5,000 is a big round number. It's a key level. I'm looking at 49,992s. That's exactly what we're looking at. 49,992s. You can extend that up to 94s. You could bring it down to 89s. Here's what's important. It doesn't matter how aggressive you want to be. How aggressive you want to be shorting in front of that. You have to stop yourself out up above 5,000. Now, my stop, I believe, is going to be roughly a 1-to-1, so we're basically looking at about 5,007. I'm more than willing to just take the loss at that point and then wait for confirmation, maybe like a daily hammer at 5,000 to take that sell and maybe hold a position then for a lot more money. I have no problem doing that, but initially, the first approach, it's going to be a tight scalp. We're going to look for a quick $15 move, which, believe me, in some gold markets is huge. Not now. The volatility is there. The daily ranges are there. You're going to have an opportunity to get that type of move, and you can get it fast. So be ready. That's all I have to say. Now, a couple of things. And be sure to tune back into these live streams or watch your trade ideas over at How to Trade. You go ahead, click on my picture, follow me. It gets beamed out to your inbox. And then also these are posted in the analysis room. They're also posted on my X account at ShadenV_trader. We also post the trade ideas on LinkedIn at How to Trade on LinkedIn. They're available all over the web, so you can go ahead and get them. You just got to do a little bit of looking. Now, here's the thing I'm going to preface this with. Let's go ahead with a daily. You can see we're rocking and rolling. Nice little pullback right there. You can see just how brilliant that pullback was. Spike low there to a spike high. That pullback right there is money in the bank. Occurred on the 16th of January. Boom. That's huge. We had a couple with handle that was huge. So buying pullbacks clearly is the way to trade this. However, we're not getting any pullbacks. And when we're not getting any pullbacks, it's very important that you understand you can't just buy 47.65s. And the reason why is you might be able to get away with it 9 times out of 10, but man, the 10th, when you lose, you're going to lose all your money. The market will reverse against you. It'll pull back. It won't mean anything, and then it'll continue. Every trade has 3 parts. It's got a robust entry. It's got an exit point and another exit point. One exit's your stop. The second's your profit target. For me, the stop loss is the most important thing in the markets. If you build yourself and your trading strategy into understanding the worst case scenario of each and every trade, you've got an opportunity to win long term. You don't ever stick your chin out. If you're in a boxing match, you don't stick your chin out and let somebody hit it. You protect your chin. In the markets, your chin's your money. Protect your money. That involves understanding where I have to get out. So in this type of a situation, the thing that may scare me off of this trade, and it's not necessarily going to develop or happen, but I'm watching it, is if we get some compression right around 5,000 and we don't get elected up there at about 49,992, 49,89, somewhere in there. If we start to see maybe an ascending triangle or a pennant set up right in front of our key level, then I'm going to start getting scared. Then I'm going to say, I don't like it. That means that there's compression there, and compression around a key level typically leads to what? Leads to a breakout. And in this situation, it could be a bullish breakout. So what we want to see in an ideal scenario is a nice elongated daily bar that goes up and gives us a touch, and then we grab that red bar, and we're in and we're out before anybody knows we were there. That's a brilliant trade. That's what we can do when we think a little bit, I won't say outside of the box because I hate the way that sounds and I hate cliches, but I will say if we're a little bit fluid with our thinking. We don't have to just marry the long side of this market, even though that's the way to be. You want to buy pullbacks. That last daily pullback was beautiful. You saw the pullback right there on the 16th of January turned into a hammer. There's another hammer. Boom. You almost have a double hammer there. So the market's going up. Just because we scalped to the short in front of 5,000 doesn't mean we can't make money. We understand it's going up. I don't know where this thing lands. I have no idea how high the market goes. I've been asked that a lot. Shane, where does it go? 5,000. I know that, relatively certain of that. 7,500 would be probably my next big number where I think you might get a top. I don't know that I'm going to get that crazy about 6,000 or 6,500 or anything like that. 5,000 is a big deal. Wouldn't shock me if 5,000 is an intermediate term top. But I'm not going to say that because this is a strong trend, and it's just been mowing down. Since we broke out last summer, it has been mowing down key levels. We've scalped it successfully on several occasions. I really like this trade. If we lose this trade, we lose it. But our risk's pretty tight. Don't let this thing eat your lunch. If you do take a short in front of 5,000 and this market breaks up over 5,000, you need to have a finite point where you're getting out. I know exactly where mine's at. Exactly where it's right there from 5,007 to 9. That's on the initial approach. If we get a hammer to set up there, then we'll talk about a position potentially later down the line. That's it. Let me see VY. Good to see you, VY. You crying? I can't read your emojis. It's too small. I'm losing my vision maybe. No, I just got to adjust my font a little bit. But you're crying or salivating? That looks like you're salivating. I'm salivating too. I can't wait to get my hands on 5,000. That's for sure. All right, so let's get back out there. Those are the two trade updates. I wanted to start with those. If you have any markets at all you'd like to look at, I'm more than happy to look at 3 or 4 for today. As far as week 3, 2026, what we're looking at, today's quiet. Well, we knew it wasn't going to be quiet. It's quiet with regards to news. We had one news event out that I think, it's interesting just because U.S. Treasuries are on the sort of the, not on the run, but definitely getting sold, liquidated right now. Wednesday, UK CPI during the London session and the Trump speech. Trump's speech is everything. I'm going to show you exactly when that is here in just a second and what it is. Thursday, US GDP, PCE prices, EIA inventories. Big day Thursday. Big day Thursday. Don't ignore that. We're going to be digesting the Trump speech on Wednesday and then also some key economic events. Bank of Japan Friday. Bank of Japan, BOJ announcements, always a lot of fun. We're going to be talking BOJ probably during that Friday session, recapping the yen, figuring out where we're going next. It's been a challenge trading the yen lately, no question about it. We'll go over that one trade idea that I had during that switch markets hot picks for this week that doesn't look like it's going to set up for us. Too bad. Tuesday, Wednesday, Thursday, it's all systems go. Today especially, Martin Luther King Jr. Day yesterday. Markets are closed. We talked about this in the Monday session. I said, listen, brace yourself. Get ready. Volatility is going to kick off in a big, big way after the futures open. After the futures open on Monday evening. Once we got back in there, we saw the computers get involved right away. We saw big action during that Asia session. And then today on the U.S. Open, we saw the markets essentially react after a day off. They reacted to the weekend news cycle one day. It's a great day to be in the market, great day to trade. Tuesday, Wednesday, Thursday. This is my own bread and butter. This is my own money management game plan. My psychology on Tuesday, Wednesday, Thursday. All systems go. It's my primary objective to hit my weekly P&L during that 72 hours and aggressively trade my plan. Whatever my strategy is, whatever my plan is, I'm aggressively trading it. If I'm going to lose money, it's going to be on Tuesday, Wednesday, Thursday. I'm not starting out Monday going into a hole, and I'm not leaving on Friday giving back everything I made during the week. Ain't going to happen. I'll keep rapping. It ain't going to happen. That's my game plan. You can do things differently if you'd like. Feel free to do whatever makes sense to you. This is what makes sense to me. And for beginning traders, I would really consider a psychological framework that sort of adheres maybe even roughly to this, because it does work. It keeps you in the game a long time, and it helps you generate momentum. I want to focus on my execution. I want to make sure that I'm hitting my trade setups. I want to cash in when it's time to cash in. If my strategy says trade it, I trade it. I don't question my strategy. Now, sometimes on a Monday, my strategy may say, hey, Shane, you need to hit that trade right now with big leverage. And I'm going to say, it's a Monday. If something goes wrong here and I lose, I don't like the position that puts me in for the trading week, so maybe I pass on it, or maybe I look for a more conservative profit target, something like that. On Friday, my trade setup may say, hey, Shane, this is a 10-lot trade on WTI crude. You need to hit this right now. And I'd say, well, I'm up 2,000 for the week. I don't particularly feel like going home a loser if I lose this trade. So I don't have any time to turn a profit for the week if I lose. So, yeah, maybe I don't trade it. But Tuesday, Wednesday, Thursday, when I see that five-star trade come my way, I'm saying, okay, we're taking that. It's time to make money. In my mind, I've already decided that it's time to make money. And if the market gives me that opportunity, we're getting it. Ride the momentum. We're looking to make money. Tuesday, Wednesday, Thursday, we're riding the momentum. We're looking for profits. It's time to build our trading account and pursue our financial goals. That's what the guts of these trading weeks are all about. Monday's about getting off on the right foot and starting with momentum. Tuesday, Wednesday, Thursday are about riding that momentum into your profit target for the week. Friday's about preserving that momentum, not giving back what we just made through our hard work. We pay ourselves for our time because we're worth it. Remember that. Absolutely remember that. Okay, so that's Tuesday, Wednesday, Thursday psychology. Now, news of the day, 3-month T-bill auction and 6-month T-bill auction. I'm not really overly excited about any of these. You can see that bond yields went up just a little bit, and a lot of that's from the selling that we saw in U.S. Treasuries early today. I call that noise. I will be shocked if that holds going into next week's trade. But the way that the bond markets work typically is you get yields. You get yields when the government's looking for money. So as those yields rise, it means they're trying to attract capital. And if you just saw a bunch of bonds maybe get sold, or maybe a bunch of treasuries get sold, then the U.S. government's back in the business of trying to attract money. The way that you get money is you offer money in return for money, yields. So if I need $1 from you, and I'm going to say, listen, in 3 months I'm going to give you 3.5 cents on your dollar, you'll either take it or you won't. If you won't, then I have to raise my ante. I got to say, okay, I'll give you 4 cents. I'll give you 5 cents. That's essentially what we're talking about with a bond auction. No worries, though. It's not really that difficult once you start looking at your fundamentals on a sort of a semi-daily basis. One thing that I do want to cover before we go any further is I do want to be pulling this chart up. I pulled this each and every day this week, probably for the last 2 weeks, and this is a good look at our gold and silver chart. Now, I'm going to go ahead and take the silver down to a 30-minute chart because I want to show you the divergence that can happen between these metals. Remember that metals are correlated. No question about it. But here's the problem with trading metals, with believing they're 100% correlated, or with a real strong, what we call a +1 correlation coefficient. You don't want to just get used to that type of thinking because it's not good enough. Each one of these markets has a mind of its own. Roughly, the trends are the same. Let's back off to a monthly here, and I'll show you. There's a monthly, let's see, on silver. Let's go to a monthly on gold. You can see roughly very similar, very similar. You're kicking tail and you're making new all-time highs. All right, we all got that. Take this thing down to a 30-minute chart. Boom, boom. What do you got? You've got sort of a breakout day for gold. You've got a nice, what I would call a nice symmetric move during that U.S. session. It's bullish, bullish, bullish. Not really over here. Even though you got this pullback sort of early in the day, maybe right before the traders got back. Maybe I would say, I can't do the math in my head right now just because this MT5 is on GMT time. But you can see right in here, this pullback that developed pretty much before the U.S. Open, much more severe in silver than it was for gold. So if you come into here and you say, okay, I'm going to go ahead and sell them both because they're crashing, well, that's fine, but gold rebounds and silver keeps going. So maybe you made money on gold, but you probably got cleaned out because that move was a hell of a lot bigger than that move. Be very, very careful with trading straight correlations. They can lead you wrong. One last thing about straight correlations. Understanding, which markets move together is great in the macro sense. In the micro sense, you'll notice that correlations can leave at the drop of a hat. And a lot of that has to do with the participation, the number of traders, and the depth of each one of these markets. Don't get fooled by correlation coefficients. I hear that a lot, especially on CNBC, which we're going to rip their article apart here in a second. But the way that they talk about correlations and trends, well, this went up, so this went up, and this went up, so this went up. Okay, yeah, that's fine and good. But if we're trading and we're looking at a 30-minute chart or a 5-minute chart or a 1-minute chart, those correlations can disappear in a minute. You can't really bet on them. You can't really bet on them because they're not necessarily real time. Don't get fooled by that. The next talking head that comes out there and says, well, the correlation coefficient's really strong and this is a great long play because yada, 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 yada. Say, yeah, maybe. Maybe if we're Warren Buffett and we can buy today and just hold it and not care about it, not care what happens in the market, yeah, then correlations work great. But pretty much everybody on the stream doesn't have that kind of capital. Takes a lot of money to swim in that pool. Be very, very careful how you spend yours. Timing's everything for us. That's what this is all about. The money management, the psychology, the technicals. It's all about timing the market. It absolutely is. Let me see. Yes, sir. I would like a peep at the U.S. dollar, Japanese yen. Sorry, I'm a yen freak. That and gold is all I trade. You can make a hell of a living not trading much else but the yen and gold. The safe haven, I love safe havens. I love the Swiss franc. Looks like we're going to miss out on that move. It's not going to come back to us, I don't think. We'll get it. We'll stay patient and get it. Nico Letterman, good to see you. Nico, welcome. Better late than never, Nick. Welcome. All right. So here's the deal. This is the article that I'm laughing hard. This is the type of, oh hell, I'll just call it what it is. It's propaganda. I'll call it what it is. This type of propaganda right here is what generates big time opportunities for us in the markets. This is a sell America. U.S. dollar treasury prices tumble and gold spikes as globe flees U.S. assets. Do they really flee? The Dow Jones Industrial Average is at 48.6, the S&P 500 is at 68, and the Nasdaq's at 25.99. Do they really flee? Are they really fleeing? No, they're not really fleeing. What this headline should read is this is risk off ahead of Trump speaking tomorrow. This is risk off because of Greenland, Iran, and Venezuela. This is risk off after volume returns over the long holiday weekend. This is sell America? Stop it. Stop it. We are not there yet. I will tell you when we're there. We're not there yet. Believe me. In any case, this is a hell of an overreaction. Alex Herring over at CNBC. If you're watching, boy, I tell you what, I would love to debate you on this one. The Sell America trade is in full swing Tuesday morning. President Donald Trump's latest threats around Greenland push global investors to shift exposure away from U.S.-centric investments. Trump threatens tariffs every other day. I don't think 10% against EU countries did anything to move markets. I don't believe that. It's more about what Lutnick said today, and this is what I'm going to cover here in a minute. The U.S. dollar index headed for its biggest decline since April. U.S. bond prices tumbled. That's why we saw a little bit of that yield uptick. We just went over this, but not really for the reasons he thinks, but that's okay. So the Sell America trade, so are American assets finished? Is it over? Is it over for America? Probably not. Probably not. There's a few things we're going to point out here in just a second that say that, yeah, risk is off a little bit, but it's not just American assets. It's across the board. In any case, this is the big market driver right now is Greenland. Last week, it was Iran. This week, it's Greenland. The week before, it was Venezuela. So 2026 is off and running with a big time, and I mean a big time news cycle geopolitically. I love it. It just means that anytime things are going on, we have opportunity. The market's moving. We're going to crush it. It's just a matter of time. Greenland's latest. Macron warns of shift of world without rules. Stop it. European leaders criticize Trump. Yeah, because he's going to threaten them with tariffs. The biggest challenge with Greenland is the natural resources. We're talking about a tremendous amount of gold. We're talking about rare earth minerals. We're also talking about an ongoing treaty that the United States has with Denmark, and it involves Greenland. Interesting. It's complex, but it's a treaty that both sides have to sign out of for it to be null and void. So when we talk about taking over Greenland, it can be done easily without firing a shot. It can be done easily without flying a plane out there. All you basically have to do is treat Greenland as sort of like Alaska here in the United States. Now, I heard this earlier on some alternative media sources. They were going over this, and it really is a statement of the obvious. The United States bought Alaska from Russia in the old days for, what was it, $2 million, $3 million, something like that. And they wanted that piece of ground, the Yukon, west of the Yukon Territory. They wanted that for a lot of different reasons. Gold back then was big, but oil turned out to be the really big score there. So what happens to Alaska? Well, a lot of residents in Alaska are paid royalties from the oil. So the oil that's pumped out of Alaska, a lot of those royalties go back to the residents of Alaska. A lot of folks up in Alaska, they don't have to work because their royalty checks are pretty darn good. You could do the same thing with Greenland, and I have to think Trump's thinking that. If, in fact, 60,000 residents of Greenland, if they are offered a percentage of the oil exports or the oil cultivated out of Greenland, just the oil, maybe even the rare earth minerals too. There's a tremendous amount of uranium up there, and then also lithium and some of the other things that you need for pretty much everything we use today, mostly these things right here. Point is this. If the residents, the citizens there, the Greenlanders, if they are compensated for their resources, you probably have a deal in about 30 seconds. Now, offering people $100,000 or $50,000 to sign on to the United States, I don't think that's going to work. If you offer generational wealth, which is what royalties are, essentially, if you offer generational wealth to the residents there, then you have a deal, and you have it overnight, and I think Denmark knows that, and I think the EU knows that. So the idea is going to be, how do we get everybody to the table to where the global economy doesn't absolutely crash or go through a correction while the details of this are getting hammered out. That's it. That's all there is to this. This could happen in a day, and I have to think that there's some smart people in the administration, and he's got a lot of them up there, that are already thinking, okay, so what if we give you some minerals? What if we give you some royalties? Interesting stuff. We'll see. We'll see exactly how that pans out. Now, we got a question right there from Shad. Nasdaq's dropping. Where do you think is the best time to enter? Well, let's be honest. The timing of this pullback trade is not that great. Right now, we're printing the US100s at 25.70. So this trade right here starting to come off a little bit. I'm not overly worried about it. If you haven't entered just yet, you've got a couple of options. If you were looking maybe for an intraday trade, I have a real problem looking past 25,000. This right here would be a decent trade, but the problem with that is, where's my stop loss going to be? If you bid from 25, where's my stop going to be? It's going to be really difficult. It's going to be difficult to determine or ascertain. I can go beneath the daily low, which is right beneath this hammer candlestick. More than likely, I mean, we could easily sell down and trade and knock this out here before reversing back up during the U.S. overnight session. So to me, 25 is pretty good, but you have to decide how you're going to go ahead and trade it. What's going to be a challenge for this trade, and it may very well end up being a loser. We're looking for a bigger chunk of money out of this, but Trump's speech tomorrow is big, and it could send the Nasdaq falling rapidly, or it could really boost the Nasdaq. I don't know which. I don't think anybody knows which. So we've got an opportunity here potentially to buy this pullback from 25,000. The real question has to be your risk management. The risk management for the original trade idea, I believe, I have to look at the exact numbers, but I believe the stop loss is somewhere down around here, right around 25, beneath 24.5. But that's more of a position trade. If you're looking for an intraday scalp, you're probably going to want to hit 25,000 right in that zone and potentially get a bump, maybe stop yourself out. What's the daily low? Daily low is 24.944, so you might be able to bet 50 pips there, maybe 75 pips. So if you were going to build that trade, it'd be something like this. Long position, you'd be buying, maybe 25.01s or whatever. So if your stop loss is going to be somewhere maybe right down around there, your profit target's going to be where right there? Something like this. Just with a nice 1-to-1. So you're looking at what? 68 to win 70 pips, something like that. Essentially, that's going to be your trade. Do I like it? It's not bad. Do I think it has a high probability? I don't really know. I know that we got a very good chance to bounce north off of 25,000, but that's more of a position. So as far as a short-term scalp, it's the first time we've tested it during the U.S. session. Might be worth a shot. I wouldn't let it breathe a whole lot. And remember, 1 to 3% of your account balance on any given trade. All right, let me see, Nico, U.S. dollar, Canadian dollar. Yeah, we're going to go ahead and U.S. dollar, Japanese yen. We'll look at those two pairs too and sign off after that. I also want to show you a 920 trade on natural gas, and we got to show you what Letnick said today too. Let me see, Eyes Hazy. Shane, should we expect a bloodbath tomorrow? I don't know what to expect. I have no idea what to expect tomorrow. I have a feeling Trump's going to come out and put the world on notice. What does that do to U.S. stocks? I don't know. Do the European hedge funds and do the Asian hedge funds decide to dump assets tomorrow as Trump's speaking to try to establish the fact this Sell America BS is on? Maybe. I think it's dicey. Eyes. I think we're seeing the worst of it right now. I think you're going to see a rebound tomorrow. And I know I got a pretty good idea that we're going to see stabilization Thursday. But tomorrow, it's going to be very quiet before Trump Dog speaks, that's for sure. Trump Dog, that's what his supporters call him, Trump Dog. I think that he's going to be in an interesting position. I don't know what's going to come out of his mouth, though, and that's why I just can't say. I don't know. No BS on these streams, guys. If I don't know, I'll tell you I don't know. That's a fact. All right, let's talk a little bit about the WEF engagement tomorrow, and then we're going to go ahead and I'll cover those pairs. If there's any other markets, I'll take one more market we'll cover today, and then I'll go ahead and sign off because we do have to look at natural gas as well. So US dollar, Japanese yen, US dollar, Canadian dollar, and we'll go through those two. If you guys have one more than happy to go over it, and we also got to hit natural gas. All right. Here's the quote from earlier today at the World Economic Forum in Davos, Switzerland. I've never been to Switzerland. We had a trader, a part of the How to Trade community for quite some time that was from Switzerland. I actually got a chance to speak with him in a one-on-one conference, and he was telling me all about life in Switzerland and what it is. I've always wanted to go. Maybe someday I'll get there, but I'm definitely interested in Davos as an idea. It's where all the heavy hitters show up every year. I think they go skiing and they have hot chocolate and they talk about how to carve the world up. I think that's pretty much what they do. But today, the Commerce Secretary Lutnick spoke. This is a very important quote because I believe it's going to be a preview for some of the stuff we're going to see out of Trump. Now, Trump's not going to talk this sternly, but he is going to talk about tariffs. And he's going to boost American success and talk about all the great things the administration's done. That's all fine and good. A couple of things we're looking for out of Trump's speech. Number one, we're looking for any talk about Greenland or possibly annexing any other land. We're looking for things about strikes in the Middle East. We're looking about further policy in Venezuela. Those are big ones. We're also looking for any verbiage on crypto. We got to talk crypto too before I sign off today. A lot going on in crypto. That's going to be the key. Here's what Lutnick said, Commerce Secretary. Globalization has failed. Secretary Lutnick at the World Economic Forum. The Trump administration and I are here to make a very clear point. Globalization has failed the West in the United States of America. It's a failed policy and has left America behind. America is done exporting jobs and offshoring its future. We will no longer give in to globalization. So what does that mean in a nutshell? It's an aggressive United States. Essentially what he's saying is tariffs, tariffs, tariffs. There's more coming, and there's going to be more restrictive trade policies globally. So that's going to be interesting to see how that tone impacts the markets because Trump more than likely is going to be doing this. Okay, now this was leaked on X. As far as do I believe that this is the exact itinerary, I don't know, maybe roughly. It came out of the White House at some point. This is for tomorrow. This is Trump's day. Out-of-town travel pool is going to be with the press corps, CNN, all that jazz. CET, I don't know what that is. He's going to get to the Economic Forum leadership. They're going to have the big picture. They're going to do all that jazz. And then right there, 2:30 p.m., the president delivers a special address to the World Economic Forum. So we've got to be very, very astute. I believe 2:30 p.m. What time we don't know is if that's or if that's going to be in Davos. If that's local time, I believe they're about 5 hours ahead of Eastern. So that would be like a 7:30 address there in Switzerland, prime time. That's probably what it is. I would imagine those are Eastern time. So I'm thinking that address right there is going to be shortly after the U.S. close. Do not hold me to this schedule 100%. Because why? It got leaked on X. These things change, and a lot of times they're not fact-checked properly before the result. In any case, if you want to follow me on X, I'm not necessarily sure which button to push here. Yeah, this is live. We're live right here. You can catch my live streams here. You can also see my intro video there, and you also get all of our trade ideas, those analytics threads that I talked about, and any other tweets that I want to put out there as well. So you can always follow me on X if you like, ShaneV_Trader. You can get all of our content there, but I prefer that you get the live streams on Switch Markets because I can't take any of your questions from X. So you've got to be able to interact in real time. That's best done on YouTube. It really is. Or in our How to Trade trading room. So whichever one that you like, be sure to check us out there. Now, as far as what we're doing with the markets, 920 EMA crossover is one of our bread and butter strategies. This was on the How to Trade YouTube channel. Natural gas has been an absolute banger with the 920. Right here, 4-hour chart to open the trading week. Nice gap up, pullback, sort of right there, but still. Our 9 EMA crossed over our 20, gave us a gold bar. We've got it all coded and ready to go, and that right there was our buy signal. It was a great trade to open the week. Probably a high-risk trade just because we were during holiday hours during MLK, but also the daily time frame. You cannot argue with the 920 with natural gas right there. There was your bid back on the 20th of October. We caught the massive run-up to over 5. And then you've also got a sell signal that developed back on the 15th of December. Nice pullback there. And then you got sort of the follow-through to that trade. So there's pretty good stuff going on with the 920 natural gas. As far as a macro view goes, you're going to be looking at something like this, right? This is something that is an ugly chart, no question about it. What I like is the macro view, the view from 10,000 feet. There's the Russian invasion of the Ukraine, the high in natural gas after that. right to this trough low on the 1st of February 2024. Really a big time low. Pullbacks right there, 475er, and you can see what happened. Boom. Great resistance right there. Big sell-off. Boom. Again, and then boom again. Interesting zone. If you're trading natural gas, you're looking at 475 to the top side. Seasonality is typically bullish with natural gas this time of year, so it won't surprise me if we test that level again. Pretty darn good resistance zone. Pretty darn good resistance zone. Okay, let's go ahead and take a look at what exactly we need to get done here to make this session complete. We need to look at two of your markets. We don't have a third yet, so I'm going to go ahead and look at the dollar yen and the dollar CAD, and we'll go ahead and call that a day. So a couple different ways we can look at it. I'll start with my Fibonacci's retracement sequence, and we'll see right there. Let's keep an eye on that US100 too. That's one that I like. Let's start with the yen, dollar yen. Okay, so the dollar yen here on the daily is really, I won't say that it's setting up nicely. I have sort of a hunch that we're going to run into some bearish price action more than likely as the week goes on. I don't know that for sure, but I have a feeling that the Bank of Japan is really marrying up to that hawkish line. And that hawkish line means interest rates are probably going to stay unchanged at 0.75%. They're maybe going to address the persistent inflation, things of that nature. So I'm watching the dollar yen, but we have a couple comments here. Yes, sir. Had a problem with the yen, and that's why you look at the daily time frame, yes, sir, and that's why you had a problem. The compression here is tough. Now, that is a holiday session. That's Monday. I'm not worried about that at all. Volume, you can see right there, volume pretty low. Today, volume's big. Why is volume big? Because the players are back. You know, the markets are back out of retirement. The players are back. So this right here is interesting. Sort of got a doji setting up on the daily. We had sort of a hard test, really a beautiful test of that golden zone down there right around 57.37. So for me, I'm watching that zone closely as being potential downside support if you get an opportunity down there. May not be a bad bid. It's already been hit twice, though, so I wouldn't bet the ranch on it. 78% down here at 156.81-ish, maybe 157-ish. Could be pretty good as well. So right now you're in a rotational phase, and life's tough with the dollar yen. Let's go ahead and pull it up. Let's go ahead and pull this one up on our 920 EMA crossover and see if we have anything cooking. This was the trade that I outlined on our switch on hot picks. We wanted that crossover. I'm still looking at it, but right in here is when we made the video. What is about right in here, probably 8 hours ago or so. A little 12 hours, something like that. But we were looking for that crossover to develop right here, and that would give us potentially our bid. Right there, you got some crazy action. And now we're starting to build back. So I think that if you do get that crossover, you could probably take the long, but is it worth it? You've got a short signal right there that performed pretty well. You got a nice little move off of it. Is it time to go long this pair? Tough to say. I probably would be laying off of this for two reasons. Number one, the trajectory of the 920 is flat. And a lot of times when you get this strategy and you get a lot of signals, it means that you're probably going to get chopped up. It's sort of that weave formation I've talked about in the past where frequent crossovers make crossover trading just a nightmare, and that occurs in flat markets. So right here, there was your bid back on the 7th of October. Incredible run-up. As far as what we're looking at with regards to our Fibonacci's, the daily downside supports right there and right there, 157.37, 157.81. On a bigger picture, can we find a resistance zone? Just be wary of your big round numbers. Beware, that markets have memories. Sort of a peak high there. Maybe a little high there on the monthly. So this right here is going to be your 2025 high. We've already hit it, okay? We've taken that out, so your high is up there at 159.45. We've traded above, and now we're starting to sell off a bit. Interesting. Very, very interesting. Now, we would love to buy a pullback based on this Fibonacci sequence. I'm not even going to outline it because it's way down the queue. But for right this minute, the jury's still out on whether we trend higher above last year's high or we don't. I don't know that we do. I really don't know that we do. And the reason why is that yen, that BOJ for the Friday session could definitely be one of those bullish market drivers for the Japanese yen. So I'm looking for a hawkish BOJ. That's sort of been the tone. Could this be the time to short this pair? Well, if you step back to that 4-hour chart right here, 920 EMA crossover, let's go ahead and talk about how to execute this trade. RSI, Relative Strength Index, RSI confirmation. Okay, we've got that established on the 4-hour. This peak that occurred back on the 13th of January would essentially be your stop out point. Okay, if that's the case, where's your entry point going to be? Your entry point will be somewhere in this vicinity, right on that purple bar close. Your stop loss, you can go ahead and put it right up in there. So your profit target, if you're looking just for a basic 1-to-1, be something like that. So essentially, that's what your short trade would look like if you're taking a short position and you feel like putting a little bit of money on the BOJ being hawkish and getting this pair to correct a little bit. We do have a failed auction setting up, and that was right at last year's high. So essentially, what you've got here is a nice area to take your trade because you're locking in sort of right up there at the yearly high. You got an opportunity here potentially to get the short. The question is how far does this thing have to go to make it worthwhile? Well, if your entry is somewhere right around 158, somewhere in that zone, 157.99, you're looking at 159.59, you're on the hook for about 250 pips. So this is definitely a position trade. Do you think you're going to get a move? Do you think you get something like that? Maybe. You can look at market structure and say this order block right here is sort of juicy. Something like that. It's doable. The question is, does it happen? Do we have the market drivers facing the yen to make this trade successful this week? Yeah. Trump's going to speak tomorrow. That's going to shake up the dollar. The BOJ is going to get involved. That's going to mess the yen up. What does it mean? Does it break bullish or bearish? We don't know. We're exposed to fundamental events. I think I would rather just fall back on my support levels and maybe scalp. That's a much safer thing to do. But if you're looking for short side exposure, there it is. 4-hour sell, 920 EMA crossover, stop losses up above yearly highs. You're looking for that failed auction to really develop and the trend to continue down into the guts of last year's range. I don't know, guys. I don't know. It might be the trade of the year, or it might blow up depending on how the next couple of days are handled. Really don't know. Proceed at your own risk. Proceed at your own risk. Let me see. Trump is speaking now. That figures. What's going to happen? Is he destroying? Yeah, I mean, right here. It's all, yeah, I mean, right now, yeah, he just started talking. So you had the Dow actually clawed back into range, and now you've got the US100 and everything selling off right now as he speaks. What's he saying? Special report. You absolutely have to watch it. Welcome to Trump risk. Danish pension fund to sell $100 million in treasuries, citing poor U.S. government finances. $100 million is nothing in the treasuries market. That does nothing.
These are rough people.
Everybody hear that?
Weapons. This one here is very bad. I'm going through this because I think we have plenty of time. I'm going to beautiful place in Switzerland where we'll be, I'm sure I'm very happily awaited for.
He's not saying anything.
In Switzerland, they don't know about this. They don't have this problem. They have other problems, but they don't have this problem. Look. Killed somebody. And these are rough people. These are not... This was all allowed into our country through open borders. These dumbest policies, men and women.
All right, he's saying absolutely nothing. He's just talking about immigration. Maybe if he invokes the Insurrection Act, maybe we'll get some movement out of that. But that doesn't look to. I'm not going to sit there for an hour and listen to the. I mean, Trump has a way of rambling. He's worse than me. In any case, let's go ahead and hit our last market of the day, and then we'll go ahead and call it. Let's see, U.S. dollar, Japanese yen. Let's go ahead and go with our Canadian dollar. Let's see, Canadian dollar, dollar CAD. Dollar CAD right here. So what's happening in the dollar CAD? It's not necessarily the best thing to be trading right now just because we haven't seen much volatility yesterday, month. December, big month. Why? Because crude oil prices stayed a little bit higher than we thought they would. And you got the big sell-off. Really, the Canadian dollar goes as fossil fuels do. Crude oil holding around $60 was bullish, essentially, for the Canadian dollar. So right there, really a beautiful pullback test of 136.65, and then the big bounce. That was a tremendous play if you got it. We were out for the tail end of the year, so we didn't get it. As far as what we're looking at right now, macro picture, you've definitely got rotation. You've got rotation setting up. So what we need to understand here is what's happening with regards to what happened last year. So this right here, February 2025, so there's January. So your yearly range runs from right there in February down to June in the Canadian dollar. That's your 2025 range. Fibonacci retracement sequence. Right there, there's your pullback, sort of your hammer formation. It's really difficult to pick this one. Given the current geopolitical environment and crude oil holding above $60, you kind of have to be leaning towards the dollar or the Canadian dollar here to gain a little bit of ground. But you got Canada, they're signing deals with China. There's a lot going on in the Canadian economy. We're just not really sure what exactly we're going to have, what we're going to be looking at in the days and weeks to come. So for me, I'm watching this closely and I'm saying, what do we really get out of this? Where should we trade it? 38% right up around 140 is great topside resistance. That's about 170 pips up there. I would definitely have that marked on my chart if you haven't already. Something right up here. Pretty good stuff. As far as like a daily, do you want to buy or sell? I really don't want to do anything. I'd rather sell up here at this resistance zone. We can take it down to like a daily chart and see exactly what's happening. I don't want any part of that. I mean, we could definitely build a case to Fibonacci scalp and buy from right down sort of where we're at. You see we hit 38% beautifully, 138.19, and now we're bouncing up a little bit. So that would have been a high impact scalp. Maybe if you want to work with this wave sequence, let's go to a weekly here. Let me see something. Okay, weekly's not bad. I have no problem scalping these levels. So this right here, you can definitely bid right there. Probably, it's higher risk now because we've already hit it once. 62% right around 137.50. That is the one that's juicy right there. That's juicy. That's nice. Big round number, 137.50. Nice sort of demand zone. We've done a lot of business in here, and potentially we could trend higher from where we're at. So I'm looking very closely at that. 137.50 would be my favorite, but I wouldn't mind selling right up there, right around 140. The bottom line is we're sort of in no man's land right now. If you wanted to hold longs, you could, and just sort of stop yourself out underneath today's low if you could go down and take out 38%. Interesting type of an environment here for the dollar CAD. As far as what we have on the the 4-hour chart dollar CAD, let's go ahead and check it out. You had a sell develop right there. That was yesterday. I really wouldn't be putting too much stock in it, but there's sort of your sell-off, and now we're sort of basing around that long-term zone we just showed you. Interesting stuff right here. I think we could be in for a little bit of good trading, maybe not. Dollar CAD, it's all about oil. Keep an eye on oil. All right, everybody, I'm going to go ahead and sign off for right now. We ran way long today, another hour stream, but there's so much to talk about. In any case, we'll go ahead and get after it. I'm watching stocks closely. Just a quick update. I'm on that US100. We're getting a little bit of bullish favor there. That's sort of it doesn't really surprise me, but man, that 25,000 is a monster. It really is. If that one's taken out today, we could definitely be in trouble to the downside of this thing. But you'll notice right there your low was 25.27, 25.027. So that was pretty good evidence that quarter handle drew some bidders. I still believe there's bidders in this market from 25,000. I'm just going to sort of step back and let this thing play out. We know exactly where we need to get out of the trade, and that's all in your trade ideas. Typically, we execute those on a one-to-one. All right, everybody, you guys have a fantastic trading day. I would go back to Trump, but he's not saying much. And you're absolutely right. Yes, sir. He looks like he's about to pass out. He looks tired. He looks tired is what he looks like. So guys like him, I think he's going to sleep on Air Force One on the way to Switzerland, hop on that thing, grab some shut-eye, and then get up and go do it all over again on Wednesday. Tomorrow, that is the big news event, though. It will be Trump's speech. I don't think we're going to cover it live just because he could talk for hours, and we're not going to do that. But we'll definitely give you the market read and the lead up to it. I think we're going to be in a pretty good position to make some pretty good trades, especially rolling into later in the week. Lots going on Thursday, lots going on Friday. I think we're going to have a great session. All right, everybody, you guys have a fantastic trading day. You're welcome, T-shirt. Good day, Nico. Absolutely. Lita, always a pleasure, Lita. Tuku, thanks, Coach. My pleasure, guys. Remember, you're what makes the community here. If you don't show up, we don't really have any live streams, so I sure appreciate everybody showing up and giving me their input. Remember, tomorrow, bring your questions, bring your markets. We'll go ahead and read through everything and see what we can do. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See you.